The information supplied on this program does not consider your personal circumstances and is general advice only. You should not act on any recommendation without considering your personal needs, circumstances and objectives. Retire Invest recommends you obtain professional financial advice specific to your circumstances. Jeff English is an authorised representative of RI Advice Group Proprietary Limited.
23-1 now, Jeff English. You've looked in your little crystal ball. Do you think the Reserve Bank will cut official interest rates again today or not?
Well, given my history with predictability, Graham,
not really good, no.
You might maybe ask somebody else. But anyway, yes, I do think they will cut.
Well, all economists are saying that today, or most of them anyway.
60-something% prediction, so that's fairly solid.
So that'll take official interest rates down to 1.5% if they cut it by 0.25%.
Yes.
That's the lowest... it's ever going to be, and so was 1.75%.
Yes.
You've got to start wondering, if you were investing in, you're putting some money in a bank, for example, you've got to start to think, well, if interest rates are that low, is it worth investing?
Well, you'd look at, say, term deposits at quite sub 3%, say 2.5%, it may get to something along those lines. So I guess, Graham, the issue becomes how much price do you put on risk? Because the alternative assets where you might be seeking a higher rate of return, a higher yield, are all assets that can fluctuate in value. That's so there's a point where you have to say, well, hang on, I can't take away my banana and buy an apple and think I've got the same thing. So we've got to be very careful with that. But that's what people are doing. Yeah. They're saying, well, I'm going to have to take more risk if I want a better outcome.
Well, we're talking now about the baby boomers, aren't we?
Yes.
The people between the age of 50 and 70 who are planning on retirement. Because, unfortunately, the media attention when there is an interest rate move, either up or down, is on the borrower.
Yes.
The people borrowing to buy a house.
Can we save?
How much can we save?
Invested?
The poor old saver... doesn't get much of a mention at all. So you've got to start to think, well, what are the options for these people if they don't want to invest in, financial institutions where the interest rate is pretty ordinary?
Yes. Well, you've got to turn to property. For example, and a lot of people now are looking at listed or unlisted property trusts to access commercial properties because they can't buy them with their investment dollars. They're too much money, but they're accessing quite large assets through trusts. Again, that's not the same thing, though. They're looking at, I can get a 7 or 9 or 10% yield, but I may get fluctuations in my value there. They're obviously turning to the share market, and we've seen a very good uptick in our markets this year. So if that was the case right now and you thought, well, I may look at Australian shares as an alternative for yield because interest rates are low, you run a fairly significant risk after a good upswing of a downswing being the next thing. So all of a sudden chasing 4 or 5% on your money leaves you in a minus situation potentially. So very difficult to find a place to put money.
Markets globally, though, have recovered from, those lows that we saw in February.
It's been a good year off a bad start, I suppose, if you think about it. The All Ords is up about 14%. Steve mentioned before there are only 4 trading days that were negative during the whole month of July. So we're up about 14% off our February low there. The Dow Jones up about 11%. The Nasdaq over there at 21%. Hang Seng 20%. Even Shanghai. China's share market has been fairly average over the last couple of years, about a 10 to 11% rise from its lows. So if you invested at the bottom of the market this year, you're looking very good at the moment.
So what are you advising your clients that are coming to you and saying, what do we need to do to try and get a decent yield?
Yes, I think at the end of the day, Graham, what we do is very much about assessing the level of risk that our potential clients are prepared to take, and trying to ensure that we don't overdo it in a chase for yield or return, because that tends to bring more risk into the equation. So we still need to have cash, we still need to have fixed income type assets, but there's a place for the right people to have growth assets as well in that chase for a better return, but also bringing in the risk factor at that point.
Okay. Just globally at the moment, are there any signs that there could be something terrible happen? I mean, we thought it would happen with Brexit. It didn't happen.
Correct.
But then we saw what was happening in Europe last year, and there were a lot of basket case economies in Europe. We thought that was going to spread, that sort of feeling spread.
So what next?
Throughout the major markets, like America, for example.
Yes.
We've got an American election coming up. Do you see anything that could affect markets globally in the foreseeable future?
Graham, I think for me, sitting on the fence as I always do, there's the possibility of all of those things still being an issue, still bubbling around behind the scenes. We tend to see volatility on bad news, and it's very quick, and it's short, sharp. Where are we up? We're down, and all of a sudden it's okay. We're back to the fundamentals again. We're back to looking at, do companies make money? Our economy's okay? Those sort of things. They're your medium and longer term issues. So if you think about these catalyst or turning point issues, the US. That could be a significant turning point around that in terms of confidence globally.
Well, you take November, that's when the election's on.
Yes.
If Donald Trump is elected as the President of the United States, that obviously will have some sort of reaction, I would suggest.
Absolutely. Significant. Brexit.
More so than if perhaps Hillary Clinton was elected.
Agree. Yeah. Absolutely agree. And that's probably more my gut, thinking about the political ramifications, but that could well become global around attitude and leadership and, the economic impact as well. I still think Brexit is bubbling along behind the scenes because nobody knows how it's actually going to affect the European region. You've got to look at the continuation of China's growth slowdown. Even though they're growing, you look at the question marks around sustainability. Europe, there are still basket case economies that could well go bankrupt. So just the fact that we're not talking about them doesn't mean that that's not happening quietly behind the scenes. So, there's a lot of those things that if you put a couple of them together, markets are not going to like that, especially after a good run. So, if the markets are starting to think, we're overvalued, bad news will be the thing that turns that.
We shall have to wait and see.
Let's see.
That decision by the Reserve Bank will be made about 2:30 this afternoon, and we'll find out what direction they will go.
Let's see where Glenn goes. I think it's his last try. I think he'll be out of the governor position after today.
All right, we'll keep you up to date throughout the afternoon as to what the official cash rate will be from the Reserve Bank. Okay, Jeff English from Retire Invest. Thanks for coming in. Do appreciate it. And of course, if you do need some financial advice and you'd like to talk to any of the staff at Retire Invest, you can always give them a call on 4639 3733. 17 to 1.